Federal Reserve expected 3 interest rate cuts next year. Recent indicators suggest that growth in economic activity slowed to a strong pace in the third quarter. The Federal Reserve said the unemployment rate also remains low. On this day, the Federal Reserve announced rate cuts through the Fed members' interest rate outlook dot plot. The dot plot shows the federal interest rates forecast for the end of next year is 4.50 to 4.75%. This means that the Federal Reserve can lower the base rate interest rates currently between 5.25 and 5.50% by about 0.75 percentage points 3 times next year. At the press conference today, Federal Reserve Chairman Jerome Powell expressed the opinion that monetary tightening is virtually complete. The FOMC members said that it is their view that further interest rate increases are not appropriate as the benchmark interest rate appears to have reached or is near its peak in this tightening cycle. Chairman Powell also acknowledged that there was a discussion about lowering the base interest rate during the process of preparing the dot plot at the meeting. The question of when it would be appropriate to return to the level of austerity policies will begin to come into view. He said this was also discussed at today's meeting. The 3 major indices fluctuated narrowly in a flat range in the early hours of trading ahead of the FOMC result. The prevailing view was that it would freeze, but they did not move hastily out of a just-in-case mindset. However, with the decision on the base interest rates and the release of the long-weighted dot plot, prices rose all at once. The Dow exceeded 37,000 for the first time in history, and the S&P 500 index exceeded 1,700 for the first time since January of last year. The Nasdaq index also broke its highest record since January of last year. The producer price index for November was also announced before the results of the FOMC meeting were announced. In November, PPI recorded the same level as the previous month on a seasonally adjusted basis. It falls short of the 0.1% increase expected by experts. The downward trend could not be continued. Following the CPI, which was in line with expectation and showed an acceptable level, the PPI also fell short of expectations. So the key point is that prices in the United States are showing a steady slowdown. Federal Reserve members unanimously froze the benchmark interest rates at 5.25 to 5.50%, the same as the previous month. At the same time, the interest rate forecast for next year's and was significantly lowered to 4.6% from the previous 5.1%. This predicts an interest rate cut of 0.75% pip next year, with 3 cuts of 0.25% p each. A total of 3 interest rate cuts are expected by the end of next year. In details, out of 19 members, 6 members expected a 3-time reduction. 8 members expected a similar decrease, and 5 members expected a larger decrease. This is the third consecutive freeze, effectively ending the austerity cycle of a total of 11 hikes of 5.25% points since March of last year.